Rajesh Kothari, Managing Director of AlfAccurate Advisors, now joining in to discuss the fundamentals of the market. Rajesh, thanks very much. Good morning. Let's just start with your view on the market itself. Have you already seen the worst, Rajesh?
Good morning. I don't think so. I think this demonetization move is unprecedented move, and there are no comparison, there is no history. So while we discuss with, of course, a lot of corporate, a lot of economists, a lot of strategists, a lot of dealers, a lot of on-ground check, what we understand is that probably nobody knows how it is going to pan out. Surely short term is going to be negative, but the question is how short term will be the short term. Will it last only up to December, or will it continue till fourth quarter FY17, or will it also continue till first quarter FY18? Because please remember, in between you also have a GST implementation which is very likely. And in that case, therefore, the short term probably may get little bit stretched to medium term. On top of it, the valuations of these companies, particularly at the consumer side, have been always moving up in last 3 years. If you look at last 10 years average price to earning multiple, and if you look at the current multiple of most of these consumer companies, whether it is a housing finance companies, whether it is durable finance companies, whether it is a consumer discretionary, or whether it is a consumer non-durables, they have moved up significantly, and probably they are trading at 30, 40, 50 or 75% premium compared to last 10 years average price to earning multiple. So while the long-term story, which is FY19 onwards, remains intact, and in fact it may get further boost, the short term surely is going to get impacted.
Rajesh, one thing, I agree with you, but one thing we've seen over the last many years in India is that investors, especially foreign investors and local investors as well, are ready to give the benefit of doubt. I mean, they don't mind buying and waiting for a year. I mean, how many years now we've heard that earnings will pick up in the second half, right? Well, it isn't going to pick up this year as well. So I agree. I mean, it will cause short-term pain, and it may impact Q1 of 18 as well. But do you think investors will be willing to buy now, looking beyond Q1 of 18, looking at beyond Q1 of 18?
You are absolutely right, and your first question was, have you seen the worst? And my answer was to that. If you believe, and we continue to believe, that long-term story is going to be intact, and in fact it is going to be probably much more stronger, the structural story. But please remember, when we say that earnings growth is going to be not there or something like that, or long-term investors remains bullish, the sectoral composition in the portfolio do keep changing. So for example, the FIs which were the highest weightage in PSU banks 6, 7, 8 years back, today FIs are not having those limits in PSU banks because they have become significantly underweight. So I think one needs to understand that how your portfolio is, you are getting realigned to the reality on ground, because there is a reset button which is pressed by Mr. Modi, and we need to understand, therefore, there is going to be some permanent damage and there is going to be some temporary damage. So your portfolio needs to align to that to make sure that damage to your investors is least even in the short term, and in the medium to long term you keep outperforming.
Okay. Rajesh, just taking off from the point that Prashant made, that maybe you need to start buying with an outlook beyond Q1 FY18, it also ties in with the fact that a lot of the HDFC banks of the world and the Yes banks of the world, they've seen a significant price to book correction in terms of valuations. And these are banks where you haven't really seen that much in terms of asset quality movement. They've got stellar fundamentals. Is it a good time to buy?
Ekta, your question is really very valid, and I think you are absolutely right. These are the few banks where probably the asset quality numbers are not going to get impacted, although in short term the loan book growth may get impacted to a certain extent, probably in the second half of FY17. And if you look at the price to book of one of the bank which you have mentioned, it is trading at last 10 years average price to earning and price to book multiple. So the downside in such stocks are surely going to be very, very limited, and upside, if one is holding for 2, 3, 4 years, is going to remain intact in line with earnings growth. And that's how what I'm exactly saying, that you need to differentiate between the companies where earnings growth is going to get less impacted, and at the same time the price to earning multiple or price to book multiple are not at significant premium compared to last 10 years average. So if you look at, for example, our portfolio thesis, we believe in 3M investment approach, as we have discussed many times. market size, market share, and margin of safety. And it is that margin of safety which is very, very important, because market size is going to be now much bigger post demonetization impact, because GDP accounted terms is going to be probably larger. Market share from unorganized to organized, therefore significant gain to the portfolio companies. But then the margin of safety is very, very important.
Okay, fair enough, Rajesh. We're going to leave it on that note. Thanks very much for joining in and bringing us all of that fundamental perspective. Well,